Good turnaround Tuesday, everybody. Hi, Hugo, my trading warrior brother. Marco, how's it going? Let's take a look around. Very interesting day yesterday. In especially stock indexes. I guess you have to call this a Kabul low or a Afghan low. And in NASDAQ, can you guys hear me?
I can hear you, Coach.
Okay, maybe it's okay. All right, so in NASDAQ, something with my headset here. Just taking a look at the daily here. I'm not an expert in candlesticks, but if you see yesterday's candle, is it possible, and I'll ask guys that know more, like maybe Blake knows, is that a hanging man? Anyway, look at what it held. Low Sinatra, Jays. Came all the way back down to this support level and a trend line. So there is one piece of information that we got yesterday. Hello, Arena. Yeah, I know Kiwi getting killed. I'm not sure what the central bank did, but must have been disappointing. Maybe they didn't tighten. Anyway, under this low, we have a correction underway. So, what yesterday gave us was kind of a line in the sand that moved up from where it was. S&P, same thing around this 44.40 level. You could see a moving average there. We could still get one more run. We'll see if they could bring it back again. Dollar, like I was talking about yesterday, I still think that there's a chance that we make a run at the double top that, Blake talked about it yesterday, everyone getting real beared up about a double top. And maybe what we're going to do is just go through it before there's a better selling opportunity. Okay, they did nothing. Thank you, John. That we take out.
Hey, Dale. The RBNZ is in a few hours from now. It's just that they signaled that they might hold off if the whole COVID situation reignites. So that's what's happening. Anyway, just wanted to clarify that. Good morning.
Good morning. Okay, now it's better. Okay, now I was only hearing out of one ear. Okay. And something that we haven't talked about in a little while is the euro pound. And once we had this little throw over and closed above it, and then even had one pullback back to where it turned good, that's pretty good action right now. I was sidetracked obviously with some other things, and the yen is up a little bit. This is my ideal scenario, that we get a new high in the Dixie and that we get a failing rally in US dollar yen up here around 110, 110.10 for one more decline under 108. So we could get a rally back up to these levels here, and I would short it. So I'm thinking that the dollar will outperform to the upside and make a new high, and we get a failing rally in the yen. Canada, it's probably a sale, because look at where oil held yesterday, guys, right here at this descending triangle line. And it almost looks like a decent shot to buy the energy here and be wrong under 543 for one more rally. So it's a pretty good area knowing for a stop. It might even be long, and if we take out this area, reverse to a short under 65.48. But it didn't even quite get to this descending triangle line, and triangles are could be a continuation formation, and maybe we have one more run. Something to keep in mind before I turn it over to Stell and Blake is that when you see a foreign policy blunder or whatever you want to call it, our adversaries look at it as a weakness, and all presidents are tested usually within their first year term. So I think there's going to be more testing of President Biden, especially after this. In fact, aren't we going to have more troops? Oh, you're thinking of fading the USD when US can't quite get it up. Yeah, I always think ahead, Richard. Yeah, so we'll see. We're only 40 pips away. Okay, Amira got his third vaccine. That COVID may be the bigger issue than what's happening humanitarian wise in Afghanistan. So I think President Biden's our adversaries are going to be looking at what happened here. In fact, I think we have more troops in there now for the evacuation than we had pre-evacuation. So anyway, another mess. But Estelle or Blake, can you tell me if yesterday's candle in NASDAQ 100 was what candlestick traders call a hanging man? What do you think?
Good morning. And
Good
I
morning,
don't know
buddy.
if Stilis has anything to say about that, but there were some hanging mans yesterday. And let me
Okay.
pull up NASDAQ just really to confirm that. And also one of the things about yesterday, we also have to pay attention to, and by the way, that is a hanging man.
Okay, thank you.
Yeah, I'll show it to you guys. One of the other things that that you got to pay attention to as well is the NASDAQ DSI was at 91 yesterday. Yeah. So I mean, that's pretty crazy. So yeah, this is, you can see it right here, guys. This is a hanging man. Now, if this was a now you probably like, well, why isn't that? Oops, here, I'm trying to grab it for you guys so you guys can see it. Shoot, I didn't want to do that. You guys are probably like, well, why isn't that a hammer? It's because when it's with that
Near a
long,
high.
it's near a high. Yeah, it's after
okay.
a prolonged uptrend. So
Okay,
that's a hanging man.
I knew you
now,
know.
Is it a good reversal signal? No, it's not. But it is one. It's a risk. It is a risk. But like I said, it's not just the NASDAQ. Look at the S&P. Not the S&P. Well, the S&P is more just a pin bar. If that candle was a little smaller, it'd have been a hanging man. But the DAX also set up a hanging man as well, and you can see, that's a red candle.
Yeah. Okay.
Nice. So yeah, there's a couple hanging mans out there, and with the NASDAQ just as
and the VIX could not fill its gap yesterday when the market came back, and it's up again today. Left a gap yesterday morning. See that?
Yeah, it sure did.
Yeah.
The thing about the volatility, I know DSI and VIX was down at like 9 or 10 a couple of days ago. It's back up at like 15. But volatility, remember, it can, yesterday was yesterday the market was really stronger, but volatility stayed high, and volatility can start to creep up, as the market prepares for some sort of pullback. That is entirely possible. Okay. And so you got to keep that in mind. But one of the things that if you were on the webinars with us yesterday, I talked about the Aussie New Zealand. Here, I'll give you the analysis now. If you're not Forex Analytics subscriber, you missed it when we were live talking about it yesterday afternoon. Here's the Aussie New Zealand, and you can read this. And you can read this analysis here. I'm going to put it up there. Intraday, Aussie New Zealand could see further declines towards the long-term 618% retracement at the 103.90 level ahead of the RBNZ this week. With the divergent daily RSI, we could see a bounce near the 104 level, and we had a descending wedge. And you can see what the 4-hour chart looked like and what we were looking for. A dip
Yeah.
Down towards 104 in a reversal.
Yeah.
The Aussie New Zealand,
Wow.
basically, dipped.
Great analysis.
Thank you. It didn't quite dip to 104. I was hoping it would dip all the way down to 104 and change. But now we've seen this big reversal ahead of the RBNZ. So the thing is if you're short the Aussie, it's a bit of a risk now. And that was, I just tweeted out, you got to be a little careful with being short the Aussie. I know we had the meeting minutes yesterday, but you also have the RBNZ today, which I think the RBNZ, could be more hawkish than the market wants. I'm sorry, more dovish than the market wants. But what you're going to see here in the Aussie is it's not just the Aussie. It's not just the Aussie New Zealand. You got the Aussie dollar. We just hit new trend lows.
Yeah.
Right, barely. But look at relative strength. Relative strength is getting oversold. It's divergent. Actually, it's not divergent here. It is divergent. I guess it is. Yeah, we hit new lows. Relative strength is lower here. So, but we're on support, really key support. This is 161% extension of this move. The last move higher. Okay. I do think eventually the Aussie dollar is breaking down, but intraday, you got to be a little careful. You also have the Aussie yen, which also low, high, 161% extension. Yeah. RSI is way oversold. And, this is just a big support zone. So if, again, if you're short the Aussie, you got to be cognizant that some of these levels are being tested. And I'm gonna throw this out there. Being short risk every day is very difficult. If you're short risk, stocks just go straight up in your face, right? Almost on a daily basis. I can't express it enough. Is daily sentiment, extreme? Sure. Are the markets, just grinding higher and it's frustrating? Sure. But if you're shorting risk right now, you'll find it, you tend to find 90% of the time, the markets will rip right back up right in your face by the end of the session. So it has not had much of an effect on the FX market. But when things are near really key levels of support, if we get any bounce in risk this morning, these Aussie pairs are going to rally. And that's a bit of a risk right now as we go into North American trade. And, you have your look what happened with the Euro Aussie just over the last couple of days. We've ripped up to new highs or towards highs. We could carve out a lower high here. I'm not saying it's confirmed, but we're trying. That could give the Aussie a little bit of a bounce. Pound Aussie, same thing. A little bit of a lower high. We've been struggling over the last 24 hours to take out trend highs. I thought we'd already be well above 190. Since it hasn't happened, I think it is a bit of a risk for bulls at this point. So that means that the Aussie is at risk of bouncing. So just wanted to pull that out for you guys. Just point it out to you guys. If you're short Aussie dollars, look, here's our patterns in play. Oh, by the way, I think Greg is coming in. Oh yeah, Greg is coming in here in a second. Greg is short the Aussie, and he short this yesterday. And, I was short the Aussie from last week, and I just closed it, our pattern in play. And the reason why I did that is because of what I'm showing you guys. So I just want you to be a little careful. Now, Greg is here, which is great because he'll be able to explain his thought process in the Aussie dollar. Greg tends to have a little bit more, obviously he's looking at Elliott waves versus the analysis that I'm looking at. but he tends to stay in positions a little longer sometimes. So let's see if he's here. Is he here?
He's going to be here in about 5 minutes, I think. But I have a couple of things to say before
we didn't want to hear it.
I know. Okay.
Good morning, Stelios. How are you?
Good morning. I'm very well.
We do.
We definitely do.
So it's funny how markets swing from one extreme to the other in terms of sentiment. It's been pretty buoyant and hopeful, and now suddenly from one day to the next, you have. Let me write to Grega any minute you want. So we have now New Zealand, and if I read this correctly, they're in lockdown again for one case. So they're quite draconian, stringent, but you know what? It's working, right? All this time, New Zealand have had very, very few cases, and compared to other countries, so it's working. But this is the worry now for the RBNZ, because the market was pretty much pricing in a hike in a few hours. I still think they're going to hike, but it might be one and done, or they might be might hike and be dovish. So we don't know yet. The RBA also said that if this COVID situation gets out of hand again, of course we're going to do whatever is needed. The Japanese Prime Minister Suga Honey, he said, what did he say? He said that the spread of this Delta variant has changed the situation completely. So this is again now the market's kind of crapping their pants a little bit, and we're waiting to see what's going to happen. But this is just so typical of summer markets. We've been saying this for days and weeks now, that we go from one level to another, back and forth. Oh, we're happy. No, we're not. It's very difficult markets to trade, very choppy. Metals are also just all over the place. Equities too. Yesterday, I mean, they rallied so strongly yesterday. We're down quite a bit, like 1% at some point. Then they closed positive. It's just, if you're in a trade and it's making money, I think just take it. So
and that you know what, that was actually my reasoning yesterday for closing out a lot of positions. It was let me remove this. I was short the Aussie yen and the Euro yen on Thursday, Friday last week. So, I shorted the Aussie yen up here at 81.15. I shorted the Euro yen at 129.50 or 60, somewhere right around there in this channel. And it's like, you get put in a position where you're up 100 pips or 80 pips. You got to take it in the summer months. You've got to. I mean, I've traded through enough August
Grega
months.
Hey,
where that happens. Hey, Grega.
Hey man.
What's going on?
Hey, so we can talk a lot today, as I see, because Steve is away.
Yeah, he is. Yes, Steve is gone. So that's good for you.
He's a photographer this week.
Yeah, I can see that. Yeah.
Hey, Greg, we were just talking about your active pattern in play, and I just closed out my Aussie pattern in play just this morning, and I was explaining to everybody here why I was closing out the Aussie. It's summer months, but I was showing some of the cross rates. But maybe for those people that are still short the Aussie dollar with you right now, maybe you can explain a little bit of your thought process that you had yesterday, and show us anything else that's on your mind.
Yeah, sure.
All right. I'm going to go ahead and stop sharing so you can grab the charts from here. All right, cool.
Okay, so actually, I mean, me and Steve were tracking this ABC correction for a while here on a daily chart. Okay, so it's still, I believe, a counter trend movement. But when it comes to trading, well, it was not time to be long because we never got any real confirmation actually on the bullish side. So yesterday and on Sunday evening, like each week, I went through the charts and actually realized that no matter what I think, the trend is still to the downside, right? So I've been looking at the 4-hour time frame chart and actually spotted a very nice consolidation here. It was clearly not impulsive from the lows. It was very slow, very choppy in this contracting range. And that's why actually I said that this thing must see at least another push to the downside below that July levels. So I've been able to count these 5 waves within a wave 4 to make this triangle completed. And that's why I actually decided to try to jump into the short side on this pair. But as you said yourself, I mean, like that, it may not be a bad idea to go out of the trade during summer months. And keep in mind that we are here in a 5th wave, and moves after the triangle are final within a higher degree sequence, meaning that you are possibly in a final leg of this whole leg down from May highs. So this 5-wave sequence can slowly be coming to an end. Of course, the ideal projection level for this 5th wave is at 0.72, but if we see a 73.80 broken, which was termination level of a wave 4, well, that would be an important change of a trend and probably completed lag down there. But for now, I'm obviously watching it very closely. If we jump back above any previous swings, that would be an important alert actually to go out, or maybe even earlier if we see move extended towards these targets. Also, if we take a look here, where I have it here, okay, this is dollar against Chinese yuan. Okay, what is very important here is that this thing has a 5 waves up from the lows. Okay, and normally, as you know, this is very bearish for overall Aussie. So this was another indication why Aussie, however, somehow could face limited upside, and that's why I was even more confident here on this bearish picture. Also, if we look at some other markets, I mean, euro dollar here is also very interesting, at least now, because on the hourly chart, okay, we can see only 3 waves to the upside from the recent lows. And this is another thing that suggests the dollar may not see immediate reversal of this bullish move. So we can see some more dollar strength in the near future. But keep in mind that then on this euro dollar pair, we will finally be approaching these supports for wave 5 that is already being in progress. So even euro dollar could then maybe stabilize after we see a little bit more aggressive sell-off here below March levels. Keep in mind that this drop from the highs from start of the year is still in 3 waves. Okay, I also looking at the open price of the year as very important. And always when you see a very strong reversal away straight from that open date, well, I'm quite skeptical, and I would not be surprised if suddenly we somehow turn back closer to these levels from the start of the year. So I'm still looking for this to be as a counter trend movement. Very nice support, as you know, is at the area of a former wave 4. And more importantly, this is not a 5-wave drop. So I really have to be careful and be aware that there can be some rally coming in. Also, since we are talking about these potential changes in trend, well, cable is definitely still very interesting. I mean, this was a 3-wave move. We stopped at the 38.2%. More importantly, this rise away from the 38.2% was very sharp, very strong one after a spike here below March levels. So it looks like that we cleared some stops down there, and that's why I'm even more confident that we could rally further. Keep in mind that this is still only 1 leg up from the recent lows. But even if this would be a corrective rise towards 1.41 level, and then we see a drop, well, even this corrective rise is incomplete because corrections are in 3 waves. And this appears to be very slow and choppy movement here. Also, we have seen this dollar move coming now in play since start of the week. Well, usually in the middle of the week, or towards the end of the week, these flows will change. So maybe we'll see these reversals happening quite soon here, and this would be very nice for cable in general when we approach this 1.3760 support. It's also around 61.8%, the perfect target for this wave to stabilize, and then maybe we rally away from it. So towards the end of the week, I would be looking for this cable maybe to finally find and attract some buyers. Also, let's take a look on gold. I'm sure that a lot of you is interested in gold here. We have seen a very interesting strong drop after short orders here at the start of last week. What is important whenever this happens is that you make a one step back and look at the big picture, because this is still at the end of the day the most important. And what I see here is still a very nice trend, the uptrend that I think is still intact, because you can see that the price action here is very slow, very choppy. It looks like it's a correction. Well, if that's the case, then ideally that's a triangle. But unfortunately, even triangle is still incomplete. Here I'm looking at it and tracking it for wave 4. Notice that was wave A. I have a wave B, and that 3-wave drop that we have recently seen was representing wave C within this triangle range. So it looks like that we could rally more from here, because if that's wave D, well, then you watch out for a push towards the upper side of the range. And even wave D should be made by 3 waves. However, nothing moves in straight line here. So watch out for temporary resistance, maybe at this trend line. Maybe later today or tomorrow when we have the FOMC, we could definitely slow down a little bit here, but only for a temporary wave B setback. At the same time, whenever see a drop here, if we see it, watch out this support here at 1750. Okay, so for now, I think that metals are sideways, but in the short term, they're even more bullish, I think. Okay, we have we have retail sales in about 3 minutes. Okay.
Yeah, just it's coming up in just a few minutes. And you were just pointing out gold. I mean, that was a big reversal from last week, and I think that that move back above the 1790 level just overnight. That was big support that held us for a long time, and I think it further risks of a continued squeeze in gold too.
Yeah, I mean, if we really see some kind of a dollar reversing from resistance, I think that gold, which is already very bullish now, if we consider where it is against a lot of currencies, I think that this gold could attract even more buyers. So I'm thinking about more upside here on gold. And another thing, I'm not sure what your thoughts are on dollar Mexican peso. Well, I'm looking at this picture very bearish. Okay, we are seeing a very nice triangle. I think that this bump is sticking, and that sooner or later we will see out of this the breakout of this consolidation. Again, Aussie is very bearish. Okay, we see Aussie trading very low, euro as well. So despite dollar doing quite well, dollar Mexican peso is not really rallying a lot. It's just holding this support. So when those currencies, if we see some kind of a stabilization, even is just a smaller recovery, I think the dollar Mexican peso could easily break to the downside. Let's not forget that crude oil also made a very nice and deep retracement recently, but dollar Mexican peso is still far away from that resistance levels. So I think that whenever these trends risk on mode, if they will come back with Aussie bouncing from a support with crude oil stabilizing, I think the dollar Mexican peso is the one that we may watch very closely for potential breakdown here into wave 5. I'm obviously looking at this more aggressively towards bearish side, because on the Elliott wave structure, where I'm looking for a triangle to be placed here in a wave 4. Also, we have this triangle potential unfolding now in a wave E of wave 4. Okay, so resistance is here around 20.0 level, from where ideally we will see a new sell-off. But of course, a daily close, let's say below 19.70, could be quite aggressive here for this pair.
Data coming out now, hopefully.
Yep. Let's see what it is.
I don't see it yet.
No, me neither. Looking. Oh, there it is. Yeah, it's negative.
Oh, wow.
Yeah, it came in quite negative actually. And so the retail sales at negative 0.4%. You know, initially you might think that, oh, that's bearish, but you know, with the consumer as weak as it is, this could be actually, the market might view this as being bullish. You know, it keeps the Fed being dovish, right? And you know, preventing them from being too aggressive. And this is going to be a dollar negative number.
Yeah.
So yeah.
Okay, interesting.
Hey, Greg, I just wanted to chime in really quick. I know Dale needs to take an interview coming up, but I wanted to say regarding the dollar Mexican peso, you know, one of the things I'm a little torn about the dollar Mex, just because Mexico is raising rates and gave us a surprise rate cut. The dollar Mexican peso hasn't broken down yet, even with stocks at all-time highs. So as long as risk aversion doesn't creep in the market, then I think your count is valid, and the dollar Mexican peso will eventually succumb to risk appetite being as strong as it is. The flip side is in the event that, you know, we finally start to see a 5%, 8%, 10%, maybe even more correction in equities. If that does happen, then the dollar Mexican peso will squeeze. There's no other, there's going to be no other way for that to trade out.
Yeah, of course.
That's the only caveat that I have.
Yeah,
because
even if we rally, like you said, maybe if stocks come to the downside and we see a little bit more aggressive move to the upside, well, I would be then probably looking for this wave E to be more complex towards this upper side of this range. And even then we could maybe retest 20.50, 60 and would still be a valid count. So
got it. Okay. Well, hey, Greg, thanks for joining us today. Dale, I know you have your interview. So, you know, Greg, and guys, if you don't know, if you guys don't know who Gregor Horvat is, well, you've been hiding underneath a rock, but more importantly, he is our Elliottician on, you know, Forex analytics. And so all the Elliott wave analysis that you see here is going to be Greg's. So, you know, make sure that, you know, if you're you know, using Forex analytics, you're, you know, coming in and reading all of his analysis you have to be a premium subscriber. So Greg, thanks for joining us today.
thank you.
Yeah, Greg, good to hear your voice, buddy. Nice analysis.
Thank you, Dale.
And Blake and Stell, good hunting today. And you could join the guys in about 45 minutes on the morning edge.
Yep.
And there goes the euro, taking out 1750.
Just as you thought, oh man, I think the euro, I actually think it's going to bounce here. So I think it's going to come right. This is all the previous resistance. It's probably going to bounce right around these levels. So don't get too aggressive down here. Anyway, Dale, it's all yours.
All right.
Okay.
So I have the pleasure of introducing Pavel Hala to our community. Pavel, really nice to meet you. Waiting to hear your voice.
Hello, Dale. Nice to meet you. Do you hear me?
I hear you loud and clear, Pavel. And I don't know if you've used Zoom before, but there's a screen share at the bottom for you, or at the top for you to share your screen.
I will try. I used Zoom only once or twice.
I bet you're going to get it because you're an astrophysicist. You should be able to figure out Zoom, right?
Yeah, I'm sure. It's sound.
I can see it. Then you select the screen. Okay, there you go. All right. So before we get to your product, which you know, I'm looking forward to seen. Maybe you could tell us a little bit about your journey and what motivated you to create these spread charts for people. So why don't you tell us a little bit about your journey in the industry?
Well, I started trading markets myself in 2007 on grains. Actually,
Okay.
it was day trading on grains, not a typical, not a typical start. But I had a very small account, just $5,000. Back then, I was a student, so I think that's understandable. And
they're great technical markets, aren't they? The grains.
Yeah, they were, and the volatility was not as huge
Like
as it
now.
is nowadays.
Yeah,
Yes. So today, that the strategy I deployed wouldn't be possible to use today because not with $5,000. So
right.
The markets changed over the time.
Although there are many contracts on the grains, I believe they still have them, right? Well, 1,000 bushel contracts.
Yes, there are some mini contracts, but they are less liquid, and well, you have to compromise and
spreads are bigger and everything, right?
Yeah,
so.
and they are not suitable for spread trading.
Okay.
But later I discovered the spreads. I mean, interdelivery spreads or calendar spreads on grains. And it was a great strategy for me because of my small account, my low capital, and they allowed me to develop strategies even for such a small account back then. And it was working great. So of course, I was trading mostly spreads on grains, but also on other commodities like hogs and some soft commodities and so on, net gas. So these
it's kind of unusual. Why your attraction to agricultural commodities? Were you brought up on a farm, or were you from an agricultural area? I'm curious as to, most people don't start with agriculture. They come in and there's something in the metals or gold bugs, or they trade stocks, so they trade stock indices. What was it that made you gravitate towards agricultural commodities or commodities as a whole?
Nothing like that. I grew up in mountainous region in Sudetenland in Czech Republic, and there is no agriculture because it's sort of mountainous countryside.
Yeah.
And, the trading or investing in a country or maybe in Europe in general is not. I mean, the capital markets are out of the interest of the majority of people. Real estate is a much more common form of investment in Czech Republic and in Europe in general. So the only reason I decided to start with grains is because these are the most liquid agricultural commodities. Because there are more liquid commodities like energy markets, but among agriculture commodities, the grains are the most liquid, which means that the spread strategies are great because you can trade even
execute.
Yeah, I mean, you can trade even more distant contracts, more distant spreads, and the risk is usually lower when you go somewhat back on the back end of the curve. If you are not just trading near the front end of the curve, because the potential rewards are the highest, but also the risk. So that was one advantage. It was a physical market with nice seasonality trends. And also another advantage probably is that, and I forgot it right now.
Okay. All right.
So,
I understand. They were the first major futures contracts, grains. I mean, the Chicago Board of Trade, the first major commodity exchange before you had COMEX in New York and the Mercantile Exchange in Chicago. So, the need for hedging grains, and you had other grain exchanges in Minneapolis and Kansas City. So yeah, I was just curious because most people, I've done quite a few interviews, and not that many people gravitate towards trading grains unless they've kind of come up in the industry. So why don't we get to the product that you've created, and how you use them, and how it might be of interest to people that are watching us live or see the video later.
Great. I just realized what I wanted to say. The grains are great, or were even greater back then, because, as I said, it was a physical market. There was a huge connection between the physical market and the futures, and it was not influenced by the outside participants, like the energy markets, for example. The energy markets are global commodities. They are politicized. Players are playing their games in these markets. But the grains, these were commodities, and the contract on CME or CBOT back then, these were the contracts focused on the US crop.
Right.
And they were somewhat isolated, not as some other markets like meats, but still they had and still have great seasonal trends. You can develop great strategies to speculate or make use of the strong contango in these markets. And once the time, or after some period, also some outside participants enter the market. So it becomes, it's now more volatile, but still, I think it's the best market for spread trading strategies.
We're having a little trouble with your audio. Keeps getting little minor interruptions, but I just wanted to let you know we could,
so give me a second so I can check the.
Now it's okay, but every once in a while it would seem like it would cut off a little bit. Now you sound good. Just leave that up there. Now,
is it better?
Okay. So Ingmar is saying that it sounds okay there. So just why don't you just continue, and maybe it's just me. Okay. Go ahead.
Yeah, so that's probably the reason why I decided to start with grains. But later I became, or I started developing strategies for various institutions. I was working for one hedge fund in Czech Republic. I was.
Can you turn your volume up a little bit more, Pavel? Just a little bit more.
Is it better?
Yeah, better now. Okay.
Okay. Okay. So as I said, later I entered the institutional world. I started developing strategies for a hedge fund and other financial institutions, mostly strategies, algorithmic strategies for volatility products like ETFs and these kind of things. These strategies are quite popular right now, but they were really something really new back then. So that was my focus back then. I was still focusing on, or delved some of my time into commodities, specifically the energy markets. So I left the agriculture market and started to focus on volatility products and energy markets. And I worked for some other institutions. I even was working on developing deep architecture for market making on European stock exchanges. So that was very interesting kind of work. And eventually I ended up focusing on my own company on spread charts. And nowadays, I'm fully committed to, working on spread charts.
Okay, so let's see what they look like.
So here we are. We are in the app. Basically, our app is focused. It's an analytical app focused on medium to long-term analysis of commodity markets. We have data for even for financial futures like stock indices, interest rates, bonds, and so on. But commodities are the main focus. As I said, we are interested in the medium to long-term analysis. Therefore, we have end-of-day data in the app. We do not have intraday data because it's useless for medium or long-term analysis, and the license for the intraday data is quite expensive. So that's the reason why we focus on this kind of research. And our goal, or our once again focus, is to combine multiple sources of data to give you the best overview of the market. So I think I will show you some charts. Maybe I will switch to full screen. I will show you a few charts. I decided to take a look at the energy markets because once again, focused on historically, and well, I think the energy markets are very important for many players, many traders. They are very, very liquid, and so that's it.
Okay.
And maybe I will start not with crude oil, but with nat gas. I mean the Henry Hub natural gas.
Okay.
So let's open a few charts. Well, let's start just with these. And this is the price chart of the first continuous contract on nat gas, which means it's an contract. You cannot trade continuous contracts on any exchange. It's made by connecting individual or futures contracts or parts of the individual futures contracts together so that you can create a long-term chart with really long history. So keep that in mind. But we can see from the long-term overview that the nat gas is becoming quite expensive. We are at $4 right now, which historically over the previous decade was the level where the price tended to turn lower. It will be even more obvious when I show you the term structure chart for the nat gas, because the curve, I would say, is even more important on nat gas than the price of the front contract, because as you can see, the curve is really dynamic. It's rippled. There are huge differences between the winter season.
So we're in backwardation here, Pavel, in nat gas?
Yes, we are in backwardation on the near and not. We are still in contango on the near end of the curve. I have some other charts, specifically about this metric, but definitely the contango is becoming much lower than it historically was.
I can tango. How about you?
Sorry?
I can tango. How about you? It's a dance. The tango.
Yeah,
it's a joke, Pavel.
I do not know that.
I'm not always serious, but okay. Anyway, so nat gas in the contango. So what's it telling you?
Yeah, I will speak about contango a minute from now. But right now, what I want to show you is that the price is really elevated, because when you compare the current price with the 15-year average term structure, you can see that the front contract is above the 15-year average. Even when I show you the 30-year average term structure, you can see that we are well above that price. Okay. And that is interesting, because something like that would be unimaginable back, few years back. And keep in mind, the averages are valid for today, for this part of the year. They are constructed by taking the prices on August 16 over the past 15 or 30 years. That's because, as I said, there are huge differences between the prices in winter and in the off season.
I know it's probably far-fetched, but does COVID have anything to do with the elevated price of nat gas as far as production? You know, we've had a lot of bottlenecks and shortages during this pandemic. Is that part of it?
Definitely, there was a hit to production, and the terminals. I mean, LNG terminals were shut off, and the rigs were shut off, and so on.
Yeah.
But this is something that was building. I mean, the bullish momentum was building for a long time. In fact, we have been bullish about nat gas for some time. For example, in our research, even back in 2020, at the beginning of 2020, I guess it was in March, yes, we released an analysis that just was about the things that are about to change in nat gas. And basically, we anticipated that the nat gas would become much stronger than it was, thanks to the supply-demand mismatch. And it was well before the winter storm in Texas, well before the skyrocketing prices in Asia. So we have been bullish about nat gas for quite some time. And
that's cool. So if I'm reading you correctly, I'd say that you're probably still long-term constructive and short-term believe that there could be some pressure perhaps for the remainder of the summer into the fall.
Exactly.
Like that.
Exactly.
I'm a mind reader.
Yeah.
So I was thinking that's what you're looking to take advantage of these elevated levels now for just a more of a shorter term type trade, a month or two. Is that your time horizon for taking advantage of perhaps how are you going to take advantage of it? How do you construct the position to take advantage of overvaluation short term of nat gas prices?
Well, I no longer trade futures. First of all, because when I was working with the institutions, I had a professional status. But later, I just didn't have time to focus on these short-term strategies. But if I would want to, make use of this opportunity, I would either use or trade it through some more distant spreads, interdelivery bear spreads on nat gas, maybe such as I have one bear spread here, which is the spread between February and January 2022. But frankly, the risk is definitely elevated because of the long-term bullish bias. So maybe I would also go with some option strategies on leveraged ETFs, for example, shorting some ETFs on nat gas, but very dangerous for unexperienced traders. So I would like to warn anyone trying this without understanding these option strategies perfectly. So
it sounds like that what you would want to do now that it's elevated, since my request was how you would do it, is that you're just going to be patient and wait for these prices to come back in and then execute a bullish longer term strategy. Is that correct too?
Definitely.
Okay.
We even released once again in our research a few months ago exactly a strategy about that, how to trade nat gas in April. And the strategy is that we are long-term bullish on energy in general. We are long-term bullish since the end of October, when we released another research video, the ultimate value opportunity, when we called the energy to be the opportunity of this decade. And we are most bullish about nat gas upstream and midstream companies. and some oil drilling companies, especially in Canada. But the point is, the best way how to, in my opinion, or in our opinion, the best way how to make use of this opportunity is through the equities, not with the futures or the ETFs on the nat gas itself, but through the upstream or midstream companies in nat gas. That's the best way how to ride the trend. And
is it because it's smoother as far as in terms of volatility?
Not exactly. The volatility tends to be even higher on these companies, on these ETFs.
Okay. All right.
These companies are simply so undervalued that there is more upside than in the nat gas itself. And moreover, you would avoid the contango drag on the nat gas, because the markets that are in contango, even when you buy an ETF holding futures contracts like UNG, you are losing money on the contango. And of course, when the market is really tight, it can flip into backwardation. But still, even in the undersupplied market, there will be some periods of contango. So I definitely think the equities, especially through some ETFs holding equities, baskets of equities of companies specializing in nat gas production and transportation, that's, in my opinion, the best way to go. And the reason why we are still bullish can be visible on this chart, because while the near end of the curve is elevated, the back end of the curve is still rather low. You can see that the prices are, I don't know, below the 15-year average. And if I zoom out,
the market's pricing it as more of a short-term phenomenon, and which it's different than your thesis that it's a longer-term phenomenon, higher prices.
Yes, the market still think that it's temporary. That this is a short-term bottleneck in production and transportation, and maybe weather is bad and so on. This is the game as usual, because this was the game over the past 10 years. Every spike in nat gas was just shorted into oblivion. And you can see that if we move into more distant part of the curve, the prices are roughly $2 below the 15-year average. So there is still a lot of disbelief in this bull market in nat gas. So I think this creates a huge opportunity. And once the curve will be repriced, I think the equities, the companies, drilling for nat gas or transporting nat gas will benefit tremendously.
All right. Well, we're starting to wind down a little bit here in time, Pavel, and I do want people to know how they can follow through after hearing your presentation and the way you're looking to position yourself in nat gas. So maybe you could show your website now. I know you have a couple of Twitter handles. Your company is at Spreadcharts, right? Is that
at Spreadcharts.com? Here's our website, just spreadcharts.com.
Okay.
You can sign up for the app. We have even the free version of the app where you get access to all the market data, and on the majority of the charts, you just click on Get Started for free. And here you can choose the free version that's totally free. We do not want your credit card or anything like that, and minimum of personal data. And you can compare the differences between the premium version and the free version. Basically, the premium version has the signals powered by
everything,
the artificial intelligence research and access to some advanced charts and the watch list. But you can start with the free version. This is all the data we need from you: your email and your password and your country. That's all. You can fill in your data, click on register, and you can start using our app for free. So it's very simple, and you can follow the same charts and analyze them for yourself. And if you need help, there is a video tutorial in the app So you can use this button to play the tutorial. It's a bit outdated, but we are working on a new tutorial, a more extensive tutorial that will be released very soon. So you can check the data for yourself, and I would encourage you to
Okay.
do that.
You got a nice comment here from Anthony saying you have a similar sentiment regarding nat gas energy as Cuppy and Josh Young on the Market Huddle podcast. You're in good company. Nice presentation.
Thank you. You're kind.
Okay, so you know what? You're now my trading warrior, brother. What do you think of that?
That's great.
You survived an interview with Dale Pinkert, not one of the easiest things to do, and I can tell that you provide a very nice service for people. And Monica's saying that she's going to register. She wishes to learn grains, and I want to thank you, Pavel, for coming here and your presentation, and even giving us a little bit of a forecast in natural gas. And Tim is just registered. So thank you very much for being here to edify the FACE community. I'm glad I reached out to you.
Yeah, thank you for having me.
It was a pleasure meeting you, and maybe you'll be interested in returning, and I'll catch up with you on Twitter.
Yeah, you're welcome. Goodbye.
All right. So everyone, that's Pavel Hala, and you could go to his website, spreadcharts.com, and that takes an old timer back because, you know, I knew a lot of guys that were spreaders. So interesting way to attack the markets. And that's it for Turnaround Tuesday, everyone. Good hunting. You could join the crew in 14 minutes on the morning edge, and I'll see everyone tomorrow. And don't just count your, barrels of oil or your natural gas. Well, count your blessings, and we'll see everyone tomorrow. Adios. Thanks again, Pavel.
Yeah, bye.
All right. Bye-bye.